So have you ever heard of the term EBITDA? Okay, so it's a financial term that stands for earnings before interest, taxes, depreciation, and amortization. And so this is something that typically, whenever someone is looking to purchase a company, they're looking at what are some of the add backs? What are some things that are non-cash items like depreciation and amortization as it relates to asset purchases or goodwill? What are some of those add backs that go back in? And then, of course, interest, right? That's going to be a telltale sign of whether this particular company is utilizing some type of loans, lines of credit, or anything like that. And those are going to be items that can be, potentially come off or be consolidated with the purchaser's own liabilities. And then you'll have, taxes, right? Okay, so are there federal taxes that are being paid? Are they irregularly classified on the financial statement? Or are there federal taxes that are there? What other types of taxes are there that this company is encountering on a regular basis? So you need to know that this is not something that is not a line item that's on your profit and loss statement, but it takes into consideration several line items that are on your profit and loss statement. But it's a really good sign of the health of a business in terms of how they're performing year over year. Okay, but it doesn't also take a look at your balance sheet, which is going to show your liabilities and your assets, right? So this is just another form of what purchasers look at. So make sure as a potential seller within the next 6 months to 5 years that you have a really good solid idea of how your EBITDA looks. And if you don't know what that term really means for you specifically, because you don't have your financial statements lined out in a way to where you can easily identify this information, then you might need to give us a call so we can get that sorted out for you. All right, guys, I hope that helps. We'll talk soon.